So one of the hardest things to do is to buy early in an intermediate cycle, and then it's even harder to hold on to your position. The reason, obviously, is when price is still within striking distance of what appears to be an intermediate cycle low, then any down day looks like the downtrend is resuming. So there's a chart of gold here. I'm pretty much convinced that this is an intermediate cycle low. Um, so, I've given my blessing for people to take their positions in the metals. And so when we had this sell off here, which you almost always have early in an intermediate cycle, this just happens, the bears try to regain control, or they assume that the downtrend is going to continue. So at some point in a bounce, they will, you know, either add to shorts or they will reestablish shorts. And nervous longs will sell and take profits quickly because that's the only way they were able to make money in this preceding downtrend. If you're long, well, you got to take profits quickly, or those profits will evaporate. So that mentality is still in full effect here, even though um, we've probably got an intermediate bottom. It's just, without a crystal ball, you don't know for sure that you do have an intermediate bottom. We have some tools that help us to try and determine that. The fact that this was, I believe it's 37 weeks into this intermediate cycle. This was an intermediate cycle low. Um, the fact that this is 37 weeks would suggest that the odds are pretty high that this is going to turn out to be a final intermediate cycle low. The alternative would be that this daily cycle at some point rolls over and comes down and makes another lower low. But I think 37 weeks, uh, if it's not the longest intermediate cycle I have ever seen, like in the last 2 decades, it's pretty close. So the odds don't favor another left translated daily cycle. So that's kind of the main tool that would suggest this is a final intermediate cycle low. So you want to, at this point, you want to buy and you want to hold on to your position. So, when we get this sell off here, I saw a lot of people panicked. They've been conditioned to only expect negative price action. So when we got this sell off and dropped back below the 10-day moving average, everyone just automatically assumes that price is going down and is going to make another lower low. The exact opposite of what happened up here. At this point, people had become conditioned to expect only higher prices. So any downtrend was assumed to be just a buying opportunity, and they needed to get back in quickly. And then, of course, when you're in the declining phase of the intermediate cycle, that strategy doesn't work. You end up losing money. But now I think we're in the opposite camp. I think we are now starting the advancing phase of a new intermediate cycle, and this cycle ran over 20 weeks. I don't really expect this intermediate cycle to run as long, but I would expect that this advancing phase of this intermediate cycle should probably run at least 15 to maybe 20 weeks, and I think it'll make a higher high. That's what bull markets do. They usually make higher highs, so you would expect that this intermediate cycle at some point will retest this high and then break out and make another higher high. So for many traders, they're just not going to be comfortable that we've started an intermediate advance until, probably at least until gold breaks above this resistance zone here, and almost assuredly what's going to happen is you'll get a breakout above that, and then that's when people become convinced that the intermediate rally is for real, and then you get a little bit too many people on the long side, and then you get some profit taking, and you'll probably get an immediate corrective move after we do break above this. So that'll keep people second guessing, and I would say that for most people, they probably aren't really truly going to trust the intermediate advance until we probably go over 2000, and maybe for many people, not until we retest and break out above these highs. So they'll miss a good chunk of this intermediate rally because they just they've just been conditioned to not trust the upside by this long intermediate corrective move. Even though I'm pretty convinced that the corrective move is over and that we are now in the advancing phase. It's just going to be hard for people to um, trust that the trend is reversed and hang on to their long positions until we get to week. Like I said, I would think we would at least rally 15 weeks, maybe even 20 weeks. So we're only on week 3 right now, so we should have probably 12 or more weeks to go before I would look for an intermediate top, and we should make higher highs before the next intermediate top. So I've been urging people to try and hang on to their positions, not get knocked off by corrective moves. There are going to be corrective moves all the way up. Um, I think I could probably almost bet the farm that there's going to be some kind of corrective move after we break out above this resistance. I suspect that the price will get at least temporarily rejected once it tests 2000, and the same thing. I doubt that we will go through this all-time high on the first attempt. I suspect there'll be a corrective move there, and every one of those corrective moves is going to look convincing. It's going to look like the trend is resuming and moving back down. And by the time people become completely convinced that the intermediate cycle is advancing and now they feel comfortable to buy any and every dip, then that's the point at which the intermediate cycle is probably getting mature, and it's about time for an intermediate top.